If you clicked for where to invest in 2026, copper, silver, gold, uranium, here's the truth. Commodities aren't alternatives. They're the price setters. While your portfolio sits in traditional stocks, a staggering $106 trillion global infrastructure supercycle is rapidly accelerating. McKinsey data proves commodities are no longer just materials. They are the new wealth engine. With national debt officially surpassing $38.91 trillion in May 2026, your dollar loses purchasing power every single day. This systemic inflation tax ruthlessly erodes your net worth, forcing you to find an immediate opt-out. The USGS just classified copper, silver, and uranium as critical minerals because global supply mathematically cannot meet the massive AI-driven energy demand. This deficit creates a historic, data-driven opportunity. By mapping the AI copper explosion, silver deficits, gold sovereign protection, and uranium geopolitics, you can build a low-stress, sovereign-protected commodities portfolio. To grow your wealth, you must follow the actual data. The content on this channel is for educational purposes only and does not constitute professional financial advice. All investments carry risk. While retail investors chase software, smart money is securing the hardware powering it. AI data centers are starving for copper. Demand is projected to add 400,000 tons annually. This is physical, non-negotiable, and absolutely massive scale. Own the foundation. By 2028, copper demand from data centers will peak at 572,000 tons in 2028, with broader estimates running significantly higher. The physical bottleneck is tightening, and the industry is paying any price to secure supply. Scarcity creates value. One AI query requires 10 times electricity of a standard search. Liquid-cooled server racks use extreme copper density. This isn't theory, it's the physical backbone of the new global economy. Copper is the new oil. Tech giants must buy copper, no matter the cost. When Microsoft needs copper for uptime, they buy regardless of cost. Cochilco officially projects copper hitting $5.55 per pound in 2026. And with supply constraints intensifying, many analysts are currently monitoring this as a structural floor. Position your portfolio ahead of anticipated institutional demand. U.S. grids are 50 years old. The IIJA, Infrastructure Investment and Jobs Act, allocated $73 billion from 2021 to 2026 to modernize the electric grid. Combined with the EV transition, global demand reaches 42 million tons by 2040. Supply cannot keep up. Infrastructure needs are desperate. It takes 17 years to open a mine. Let's pause. Think about what that 17-year mining delay actually means for supply. Ore grades are cratering. Even if we discover massive deposits today, the math ensures a multi-decade supply gap. We are facing an absolute scarcity event. The timeline is broken. The SPEED Act is the blueprint. It fast-tracks critical extraction. We are seeing a complete re-rating of assets as miners struggle to fill the gap. Current supply dynamics could contribute to long-term price appreciation. Policy is your engine. Ready to execute? The ETF like COPX provides operational leverage to the copper supercycle. Review its top holdings now. This is your first entry. Next, we expose the silver deficit that institutions are hiding. Get your position secured. Silver is not just jewelry. It is high-tech industrial armor. 6 consecutive structural supply deficits have removed hundreds of millions of ounces from above-ground inventories. 60% of demand is now strictly industrial. The market is physically starving for supply. Silver is under pressure. Solar photovoltaic demand, particularly TOPCon technology, and electric vehicle production are driving significantly higher silver consumption per unit. Once used, it is gone forever. Solar and automotive demand is creating a permanent structural floor that paper derivatives cannot hope to match. Demand is structural, not cyclical, and unlike fiat currency, you cannot just print more silver. 80% of production is a byproduct of lead and zinc. Miners cannot ramp up silver output regardless of price. This is an inelastic supply constraint, creating permanent market tension. The supply is effectively locked. The BEA excludes precious metal bullion from GDP investment data because it is categorized as a valuable store of wealth rather than productive capital, highlighting the disconnect between financial reporting and physical reality. The physical evidence is clear. The London and New York vaults are seeing a structural depletion event. This is the ultimate. If physical silver moves, miners move exponentially. Undervalued stocks are currently mispriced for this reality. This disconnect is your primary opportunity. Investors often look to producers to potentially capitalize on these supply constraints before broader market adjustments. Stop guessing. The Sprott Physical Silver Trust, PSLV, holds fully allocated bars in secure vaults. This is one method for investors to gain exposure to capturing this widening price gap. Keep it simple. Vaulted, secure, and ready. You now own the industrial base. That is your second win. But industrial assets only protect growth. They don't save you from currency collapse. We need the ultimate, timeless, sovereign asset to survive. Insurance comes next. Gold is the only asset that survives every fiat collapse. When central banks devalue your savings to cover debt, gold remains the insurance policy. What happens during periods of severe macroeconomic stress or prolonged currency devaluation? Gold is your bedrock. Gold allocation can reduce portfolio volatility. It is your shock absorber. It is not about gambling, it is about de-dollarization. In a world of infinite printing, physical gold is the only finite reality. Stability above all. The US has now about $39 trillion in debt as of May 2026. Inflation is the only way out for the political class. They are literally printing away your purchasing power. Gold is the only way to opt out now. Don't fund their failure. BRICS nations are dumping treasuries to hoard gold by the metric ton. They are executing wealth protection strategies that you are being told not to use. Follow the central bank money, not influencers. The smartest money is moving! You have a choice. Secure the physical supply today or pay the inflationary premium tomorrow. The deficit math is clear. With demand metrics accelerating, historical pricing models suggest the current accumulation phase may be finite. Think of gold as your unshakable savings. It functions as a historical store of value designed to preserve purchasing power over the long term. You are protecting your future self from the inevitable failures of the political banking class. Protect your legacy! For the digital investor, GLD provides liquid, frictionless exposure to gold. It balances your portfolio against high-beta industrial commodities. It is the core of any serious, long-term wealth protection strategy in 2026. Liquidity meets safety. Hold physical coins for absolute sovereignty. Many investors allocate a portion of their portfolio to physical gold to reduce counterparty risk. In scenarios involving severe institutional stress or counterparty risk, the physical metal is the only asset you truly own. This is your insurance. Own it in your hand. Gold acts as your shield, but our next metal is your sword. It has an energy density so high, it is rewriting geopolitics. Prepare for the most misunderstood and highly leveraged metal on Earth. Unlock the power of uranium. Net zero is impossible without nuclear. 20% of oil passes through the Strait of Hormuz, making it a strategic security risk. Nations are pivoting to nuclear as the only reliable, sovereign energy source. The energy transition shifts here. One uranium pellet packs the energy of 149 gallons of oil. A single warehouse of uranium powers a nation for 5 years. This is a physical energy density that oil and coal simply cannot ever match. Physics dictates the winner. The U.S. ADVANCE Act provides regulatory reforms and targeted funding to accelerate advanced nuclear reactor deployment. With Kazakhstan's production failing, Western mines are now the only known secure source. Some industry analysts project these dynamics could drive spot prices toward the $90 range. Capital is flooding in. The U.S. prohibition on Russian uranium has bottlenecked supply. This structural pricing floor is already driving historic highs. The market is tightening, and the supply chain is officially, irrevocably fractured. Market data suggests the tightening phase is actively underway. AI needs nuclear power, not wind. Hyperscalers are signing 100% purchase agreements for nuclear power. It operates at 92% capacity. Nuclear is the only energy source reliable enough to power the AI revolution. AI runs on nukes. Global inventories are plunging. New reactor construction is accelerating. We are past the breaking point for future deliveries. The structural deficit is no longer theoretical. It is happening right in front of us. Supply is disappearing. For liquid exposure, Cameco is one of the blue-chip leader. For pure commodity exposure, the Sprott Physical Uranium Trust potentially removes mining risk. This is your path to capturing the nuclear energy supercycle. Choose your entry point. You have the blueprint: copper, silver, gold, uranium. You now understand the 4 pillars. But how do you integrate these into a single, cohesive strategy to conquer the 2026 financial friction? Integration is the key. A barbell approach combining physical metal trusts with selective mining equities is one established method for commodity exposure. This is how the pros hedge against stagflation. Observe how institutional investors are positioning themselves to own the assets. Mastering this allocation is key. Many investors consider allocating 5 to 15% of their portfolio to hard assets as part of a diversified strategy. It is enough to accelerate your net worth, yet resilient enough to survive any inevitable commodity corrections. Build it with precision. Smart capital is allocated. Anchor with GLD for stability. Drive growth with COPX. You can build this foundation in 20 minutes. Stop the analysis paralysis. The 2026 cycle is moving. You must be positioned to capture it. Consider how these foundations might fit into your long-term strategy. A 60-40 allocation between industrial commodities and gold is one approach some investors use to balance growth and stability. This mathematically reduces volatility while capturing the massive upside of the commodity supercycle. Do the math. Trust the logic. Data-driven strategies rely on long-term historical analysis. Forget the capital paradox. You do not need $50,000 to start. Don't have $50,000? Good. You only need $50 to buy a fraction of these assets today. Fractional ETF ownership democratizes the entire process. Bypass the liquidity traps. Start small, stay disciplined, and own the physical assets today. Wealth is accessible now. Avoid the noise. Ignore options trading finfluencers. Value arbitrage through recurring, disciplined commodity accumulation is the only mathematically sound way to build genuine, long-term autonomous wealth in the current U.S. economy. Build it. Discipline wins every time. Expect 20 to 30% corrections. They are features, not bugs. If you cannot hold through the volatility, the institutional whales will shake you out. Stay strong. The biggest moves always require the most patience. Volatility is the price. Ignore the noise about new battery tech. Aggregate demand for this metals basket is historically robust. The macroeconomic trend shows strong resilience. You are holding the physical reality of the next 2 decades. The macro picture is absolute strength. You are not alone. Join thousands of investors breaking free from systemic friction. We are building the sovereign movement. Your independence begins with this collective intelligence. Let's build the future together today. Strengthen our numbers. This is your awakening. By holding physical, you decouple from the standard vulnerabilities of fiat currencies. Transform anxiety into sovereignty. You're no longer just a spectator. You're the boss of your wealth. You are now free. The supply-demand metrics pointing to a 2026 supercycle are highly compelling. Evaluate the data and determine your risk tolerance. Pick one critical metal, verify the supply data, and secure your position. The clock is ticking. For instant exposure, look into all-in-one commodity ETFs like COMX. Subscribe to stay ahead of the macroeconomic curve. Stay smart, stay invested. I will see you on the sovereign side of the trade. Let's dominate together.